All right, I've milked that for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here, another green week. So that is, count them up, 12 out of the last 13 here for the markets, and definitely starting to see signs of euphoria come into the market as financial conditions, now the easiest since 2021. So that was even before the bear market here. Take a look. It's pretty remarkable here, especially with interest rates, near 5% or Fed funds rate above 5%. But financial conditions are the easiest that they've been in 2 years here, and the market is essentially front running this Fed pivot. But there is a lot of data this week. So we last week we talked about some semiconductors, TSM reporting they had a favorable reaction, but this week we had a little bit of a mixed bag. Intel, KLA, 10 core also falling on earnings on Friday. So a little bit of weakness here. Market kind of running these stocks up, and that's the concern here going into we have 40% of the S&P's market cap reporting this week, including Apple, Amazon, I believe Google this week as well. So lots more earnings to get through, lots more big tech to get through. I think AMD reporting late this week, and the mentality here has just been buy every semiconductor before earnings because it works, right? And a few of them starting to not work, but when you run up expectations this much ahead of earnings, it's very hard for the market to be wowed by those earnings reports. So we're seeing a little bit of sell the news kind of come into some of these, but more so than that, we do have the Fed this week. We have the FOMC. And the market has run up, as we just said. The 12 out of the last 13 weeks have been green for the S&P, and bigger than the Fed, I think. I mean, everybody's going to focus on the Fed, but really what I think is the big mover here is going to be the QRA, and that's on Monday. We can take a look here, going back to the last two. In August, Yellen had to issue a lot more at the long end of the curve. That means that can't come out of reverse repo. And we saw liquidity sucked. Here's the S&P 500. We saw liquidity sucked out of the system in August, right? And we saw yields kind of inch higher. There it is. There's the top. And, we went down into, guess where? Right here, October 30th was the last reissuance. And as it was well documented that was, mostly out of the short end. So they just sucked it out of reverse repo. And here we go, blast off to new all-time highs. I think the QRA is a bigger event, at least to me, than the FOMC. I mean, I don't think the Fed, it could be wrong. I mean, I don't know what Powell's going to say, but I don't think he's going to really say anything that we haven't already heard. We know that they're not going to cut at this meeting. I guess what the market would look for is hints as to whether they'd cut in March or not. But I think that QRA is going to really dictate what the Fed does here. And we've talked about yields here, and they have continued to inch up. This is the 30-year here, knocking on the door of 4.4%. So, and if Yellen issues again at the long end, that's going to cause a spike in yields. And I think it's going to, the market's priced in this 6 rate cuts this year, and I don't really see that happening. So we did have PCE data on Friday, again a little bit on the mixed side, but take a look at oil here. This is going to be big next month. I'm interested to see what January CPI and PCE looks like with oil breaking out. We'll talk about oil a little bit later, but finally through that 75 handle, and that is going to $80, maybe even higher than that. But for next week, lots of earnings and lots of data to get through. Obviously, like I just said, QRA and the FOMC. The market has run up into that. And the market is very strong right now. If there's anything that's going to derail that, again, there's lots of euphoria out there. I've been hoping for a blow off top so that we can get an actual, correction, get enough bulls on board, get enough bears out of the market. And we may be starting to see that. Definitely seeing it in, like I said, semiconductors. You see the Qs there ripping higher. Look at the SMH here, just went parabolic up until Friday into the Intel and KLA earnings reports. And that's kind of what you need in order to get an actual correction. You need enough bears, offsides or off the on the sideline. You need enough bulls to be offsides, essentially. If we take a look at one other little breadth indicator here, you can see the percent of stocks above their 50 moving average. And I'm just going to go back here on a weekly. You can see, generally when we get above 80 to 85, You can see here on the left column, it's usually an indicator the market's ready to correct here. You've had some false positives here where we only pulled back for 2 weeks, but again, this was also in 2021 when we had massive 120 billion a month in bond purchases. When you had a little bit more of a balanced market, you can see it's generally a pretty good indicator, and it's starting to turn down now. Again, I just say it again and over, it's Mag 7 and semiconductors doing all the work. If the market loses those, they start to roll over. You're going to need other sectors to pick up. Otherwise, this market will come back down. But either way here, markets are at all-time highs. A little stretched here, but we'll see what we get going into next week. If we do come down here, let me flow my trend lines on here. So again, big level for the market. If we do correct, you got to hold 47.90. If we close below that, I think this market is open to, more of a deeper correction. Outside of that, anything above 47.90 would be a pullback. This will be obviously major support right around 4600. You had that big pivot high from the summer. We consolidated and then broke through that. So if we were to correct here, this would be a big level. And then again, if that breaks, we can talk about other levels, but we're nowhere close to that right now. So, but in the short term, 47.90 is that big line in the sand for me, at least on the SPX. For the triple Qs here, again, I would say probably, 408.71, that was your previous all-time high, remember? So, any close below that, especially on a weekly, would definitely tell me that we're probably into corrective mode here. Outside of that, any low volume pullback is just a pullback until proven otherwise. And again, we're above the moving averages. So, if the market pulls back without a heavy volume, meaning over 100 million shares on the SPY, again, it's just a pullback and nothing more for the time being. Russell 2000 here did get a bid this week. Not like the rest of the market, but you could make a case here. And I know I've talked about 197.50 as a level. You could make a case here that you have kind of a mini bull flag there, right? So we got up to this level and we just flagged for 4 days. So I'd say the Russell's in decent shape for a pop to 200. So that could definitely be in the cards, maybe even a little bit higher. And again, like I said, this market's going to need that to happen. You don't want the Russell rolling over if big tech rolls over. This market will come down. It'll come down hard if big tech and semiconductors come down, and you don't get a bread thrust. You don't get the Russell to pick up, and all these other laggard sectors, small caps, etc. But right now, technically looks fine. Back below the 50 would be a little bit of a concern if that happened, and certainly taking out this pivot would bring you back down to 179, 180. But right now, it's trying to put in bullish consolidation for another push. Again, 200, your psychological level, and then 205 still remains resistance for the IWM. For the diamond here, did manage to close at a new weekly all-time high. And it closed above 380. Still got a little bit of just technical resistance at 382.50. It's just kind of like a mathematical level to me. It's not really anything super important. Through that, we'll just say the next psychological level is 385 there on the DIA. If that happens, taking out these pivots and taking out 370 or 369.50 would be that kind of line in the sand, right? That's a previous all-time high, especially if you got a weekly close below that. I'd say, honestly, you're vulnerable down to 355, right? We have not built any support on the way up for the Dow, and I know it's trying to break out right now. It had a strong close, but you're still extended from that 20-week moving average. I know you'll say, oh, well, it's, you had a bull flag here. You did, but still a little stretch there. So a lot of the time, those can get ripped right back down when you try to break out before you're ready. There's a lot of charts I'm going to show you today that look very similar to that. But, right now it's holding up and the trend is up. So that needs to be respected. SMH here, again, they had a new closing high again this week, but then pulled back in. Take a look at the SOX here. I know this is weighted a little bit differently, but the SOX made a new all-time high this week and then closed red. If I told you the SOX closed red this week, you probably wouldn't believe me. You'd probably have to go look it up. But it did close red by a few points. Again, let's not get too carried away here. This trend is still up. If we look at the SMH, that still was green for the week, although, it did come in, off the highs on volume. So, again, just watch out here. I mean, I would not be long these semis. If you are, trail your stop, please. Put a hedge in. They are very stretched. We're seeing signs of extreme greed now. And, I've been doing this long enough to know how that kind of ends. But, again, doesn't mean they can't go higher. The biggest, the most amount of gains are made in the shortest amount of time at the very top. So Again, I'm not saying they can't go higher. I'm not saying that's necessarily a sell signal there, but there, it looks like there is some distribution coming into play on the charts here. And again, these stocks are very stretched going into major volatility events. Okay, the QRA is not a joke. FOMC is obviously not. It's obviously very important. And we have big tech earnings as well. AMD reporting later this week, but SMH coming off the highs. If it does come down, we got a little pivot there at we'll just say 175, and then you've got these levels I already have had marked for a long time, which would be your next levels on the way down. IGV continues to remain really strong here. So again, it went up to the 430 level I talked about last week, and it's just kind of pulling back. But no real problems, no sell signal. If we get an outside move on volume, then we know that there's a top in place. Outside of that, there's nothing to say this can't consolidate and potentially go higher. So IGV still remains in a strong technical position. Only thing I don't like about what IGV is doing is I don't like all these gaps, like right there, right here even. Usually those are not good because if you come down on volume, there's no support between them. And you can slice them pretty easily, but again, right now, technically speaking, there's no problems here with the IGV. Another chart pattern here that looks pretty good is the transports. So transports here acting well, even despite a recent pop in oil prices, down 32 basis points on Friday. But take a look here, up move, and it kind of looks like the Russell, right? So green bar on Monday, and then just sideways. So if this can continue to consolidate here, there's nothing to say this doesn't go up to 16.4 and then back to 16.6. So transports here are holding up okay. We got through a lot of airline earnings. A lot of those were, they're all over the map. Southwest had a big pop, but came right back in. Delta came back in off the lows. AAL had a nice pop on Thursday. So some of the transports acting well here. And again, I don't really see any issues here with the DJT on the chart. Again, this is a sector that's going to need to pick up if Mag 7 comes down. All right, let's get over here to interest rates. So we'll take a look here. And here's our 2-year. Again, 2-year also looks good. So we talked about the 4.1, 4.15 level. We got a bit off that, and you can make a case you've got a kind of a bull flag here starting to form on the 2-year. If this pushes up, it's going to 4.6. 5-year, if that pushes up, you'll have a pivot around 4.25, and then 4.4. 10-year, big levels at 4.35, 4.3, 4.35, and then through that is 4.5. The 30-year, your big level is 4.6 and then 4.75. I do think this gets up to this level, and I do think the market at some point does not like that. Right now, the market's on a sugar high. It's been able to ignore. Yields have been trending up for the last month. So, and the market does not seem to be bothered. Same thing with the dollar index, which we'll talk about in a minute. I think at some point the market does start to respect this and say, wait a second. We're supposed to be getting cuts here, but the 30 years back at, 4 3/4. So that is, kind of what I've got, mapped out, as you guys know, for quarter one here. But right now, yields holding up, and again, that QRA Monday is going to be a big deal moving forward. XHB here tried to break out on Monday. It pulled back in again, kind of similar to that Dow chart. It tried to get up there, but still very extended there. On the weekly time frame, this 20 moving average needs to catch up to price if it's going to move higher. But right now, pattern-wise, there's no problems with the XHB. If it does happen to close the week below 87.43, that's a big negative. So then I think it would be in full corrective mode. VNQ here, just kind of chopping around this week on that 50 moving average. I would not want to see it take out this pivot. So you're headed down to $79 to $80 if that happens. On the weekly, again, you still have a green bar and you're pulling back. Again, if you close below 83.24 on a weekly, this is going lower. Right now, we'll give it the, we'll just say neutral bias on it until proven otherwise. All right, XLF finally got up to our level, 38.25, and we actually closed above that. So pretty good move there for the XLF. Again, strong close. Again, still looks very similar to the charts I just showed you here, right? Bull flag, still extended from the 20 weeks. So I don't know how long this is going to last. Again, I'm going to give it the benefit of the doubt until we get a sell signal, but I'm just warning that this is still extended here, and I don't think we've done enough consolidation to really sustain a move at this point. There's a lot of supply, right? Anybody who bought up here has been underwater this whole time. So, they're likely going to be sellers. You got a little weekly pivot here at 39. Then there's a big one at 40. So there's lots of supply up here. Who knows? Again, with liquidity in the market and financial conditions loose, maybe you can go a little higher than people expect here, or than what you normally would. But it is a little overbought here, from what I can see on the larger time frames. KRE is actually okay though. So specifically the regional banks, I think, are a little bit better. Again, the up move on Monday and then just sideways for the last 4 days. No problems. This can still go to 55 to 56. So I don't see any issues here right now with the regionals or the KBE. Those look okay still. Broker dealers don't make too much out of that. We had a pullback and now we're getting a bid up, and we're back above those moving averages. All right, so on to commodities here. So oil did break out this week, and a lot of shorts in this. So you can see you had the higher lows and essentially you had equal highs. So we're just hammering on that 75 handle. And we were able to push through that. So there's only so many times you're going to hit that, one, 2, 3, 4, 5, and then literally 3 times in the last 3 days this week, or I should say Monday, Tuesday, Wednesday, with higher lows. And there's only so many times you're going to hammer on that before it breaks out. So that did happen. And I like how you hit the 200 on Friday. And you can see the CTA shorts come in and they got blown up. So they couldn't even hold the 200 moving average, but we consolidated, so that makes sense. This should get up to $80. And then, I'd say target 2 would be probably about 85. So I know there's a lot of lines on this chart, but if you take a fib there, you're going to see your 50% fibs right above 80, it's 81. And then your 618 is 84.60. So right in the $84, $85 area would be your next target if it gets up there. But crude oil looks good. And again, I'm interested to see what the CPI looks like next month if this sustains. A lot of problems in the Red Sea right now. The market was not bothered by that, but at least not originally. Maybe that was just shorts keeping it down. I don't know if they're going to get run over next week. We'll see what happens. But crude definitely inching higher. And, obviously that's not a sign of disinflation. So anyways, XLE here, that was up nicely as well. Take a look, 1, 2, 3, 4, 5, 6 days in a row green. Maybe a little resistance here at the 200. You got a gap fill right there, but nice thrust off the lows. I've been talking about the upper 70s for a while. We got down there and it got a bid. XOP, I would have liked it a little bit better at 125. Didn't quite get to where I liked it, but still the same thing. Up move. Again, we'll say, right in this area, there's a little bit of chop that we could get, maybe could stall out at. There's a minor pivot there at 135. So maybe it stalls out there, but again, nice level and it's acting well. And you guys know the one I like, the OIH, which I'm in, already taking profits on some of this here, but right into that 280 handle and straight up here. Now we are into a little trend line here. So again, I need to back off, but what you want to see here is, just a pullback and then a higher low, right? So each time we've hit this, we've kind of put in like lower lows, right? So here we would only look for a higher low. And once you get that, you're going to have a nice breakout on your hands here. And I like what it's doing on the weekly. It looks pretty good. Uranium, not much to speak of here. Just a little pullback here. CCJ still in fine technical position. The URNM, same thing there. Pulling back into those moving averages. Spot uranium is parabolic. Just be aware of that. But on the charts, these are fine for right now. So uranium's still acting well. We had that huge bid a week ago, and right now just pulling back. Nat gas was all over the map last week. There was news of Russia stopping LNG exports. Then Biden talked about cutting off LNG exports. Just a complete mess here. It did pop up on Friday, despite the Biden news. This is going to gap down to about 220 on Tuesday after the contract roll. So it may even be Monday, but it is going to gap down into this area. So this chart's going to get a little broken here, but we'll see how that shakes out. Again, those contract rolls get kind of funky sometimes when you have 35, 40 cents in between. I mean, this closed at, I think it is going to be Monday. So this closed at 272 on Friday, and it's going to open at 220. So it's like a 50 cent roll. A lot of the time, those gaps will get filled pretty quickly. We'll see how that works out. But again, kind of this, nothing's really changed here. We had a big move up In fact, if we look at the monthly, we had a big move up and then kind of a 1-2 pullback, and but nat gas is kind of holding this level here. Usually it bottoms around this time of the year and then kind of works its way into maybe some type of chop into March. We'll see how this plays out here, but this chart's going to be a little funky here for the next week, so maybe a little tougher to read. But anyway, nat gas holding up this week. All right, dollar index, again, we touched on that earlier. Again, it's been going up since the 20th of December, and the market has not been bothered. This pattern suggests a move to 104.35. So from there, we'll see how that does. If we get through that, then the next level, you have a small level at 105, but then I think it goes to 106. I'm not so sure how that plays out, but right now in the short term, that's what I'm expecting. I'm expecting a move to 104.35, and I think it does that this week. So dollar index still holding up, and again, market not too bothered by it. Maybe I don't know what it's going to take to change that, but that's what it is right now for face value. Gold, again, had a green week here. Again, that's also a contract rollover, though much smaller than what nat gas had. Again, the bigger time frames still remain bullish for gold. My question is, if I'm right about yields, does that put pressure on precious metals into Q1? Certainly could be a thing, but also gold getting a bid even despite higher yields because of geopolitical problems and instability. So that is also kind of an underlying tailwind. But right now, again, the levels have not changed. If we get down here, you've got a trend line there, 1950 area, and this is kind of your big breakout level here. For gold, we get above these pivots, especially on a monthly close, then it's on breakout. Silver is a little bit on the softer side. It tried to dip down. I told you guys 22. That's where it got a bid. If it starts to roll over, it's going right down into this area right here. This is where it turned around before. I'd probably be a buyer there, and I'd be a buyer below anything below 20 as well. But right now, just doing a lot of backhand filling here. Platinum getting a bid. Again, that level got defended, so we had a little pop, pull back, and then a continued pop. This needs to get back above 960. Then it can go work its way towards 1,000 again. Palladium, again, still holding that double bottom area. Again, I do think this area is a zone for accumulation. Copper here, that also got a nice outside bid too. Interesting. So again, they tell us inflation's going away, but copper with a pretty good bid there. I still think this wants to have one more push down, but I think that would be a buy. But right now, a lot of chop here, nothing to really do here. I mean, this has been sideways for, excluding like Q1 last year, it's been sideways for almost a year. So nothing to really do with copper here. I'll give it the upside bias to 395. If you take this pivot out, it's going down to 360. All right, Bitcoin here. So Bitcoin continuing down early in the week, but got a bid. We talked about 38 holding, and it has held. So again, all I really care about right now with Bitcoin is this green bar here. So that's 39,983.29. If we're above that at the end of the week, which I'm doing this video Sunday, so Sunday at 8 p.m., this pattern is still bullish. I don't care what anybody tries to say. This pattern is still a bull flag, bullish inside bar on the weekly. And it's really that simple. If we close below that, then it's a failure and it's going lower. But right now, it's holding up. It bid off the 100 moving average where we said there would be support. Again, 38,000 area. And it's just doing what it's supposed to. If this comes down and takes that out, especially on a weekly close, then I'll change my tune. Again, I don't have any skin in this game right now. So, I'm just giving you an unbiased opinion. But if we do take that level out on a weekly, you're probably headed back down to 30,000. Just so you guys know. But right now, I don't really see any problems here. It's getting a bid where it should. A lot of people got really bearish. From what I can see, a lot of people were, dunking on Bitcoin when it was down here, and it's usually when it's about to turn around, which it did. So I don't see any problems here with Bitcoin, at least at the moment. All right, again, so lastly, just remember QRA Monday, FOMC Wednesday, lots of earnings, Apple, Amazon, and I think AMD's Tuesday, but Apple, Amazon, I believe, reporting on Thursday. So lots to get through this week. Just be careful here. Seeing signs of euphoria is never good. Usually it can end pretty ugly, but we'll see what we get here. If some of these other sectors like transports and, small caps can kind of firm up, I think you can maybe, the market can kind of get out of this, euphoric situation, possibly mostly unscathed, but I do see at least I think, a corrective move here coming in. Specifically semiconductors, possibly big tech. Again, the more that we run up into these earnings, the more that we run up into these volatility events, the more offsides the market gets. And that does have me a little bit concerned here as the market is getting a little one-sided. Anyways, guys, I'm going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.